Hey there, Jarrad Mahon from Investors Edge Real Estate, bringing you my latest Perth property market update. And in this one, I'm going to be going into where is the demand likely to be coming from and what are the factors that are going to influence that we should keep a watchful eye on. And it's the first time I've gone into these. I think it's going to be key to when our market is going to move around into recovery. So I'll first go through the housing market as it is now, the rental market, all these demand factors, and then some of my predictions and suburbs that I think will do well over the next year. Hang tight. I've finally found some time to bring this to you. I'm at home on a weekend with my baby finally asleep, so hopefully she doesn't wake up, and I've been putting this research together for the last few weeks and finally got a chance to record it. Sit tight. So, in the number of properties for sale, we've seen this continue to trend upwards from September of 2017, and we've at least had a bit of a tightening of the market the last 3 months. We were at our highest ever number of properties since I've been recording back in May, right before the election. It was one of the worst markets I've ever sold in, and we were up at 17,060 properties on the market for sale. We've started to trend backwards the last 3 months, and I expect the number for sale to increase going into spring as we have the spring selling season. And we'll have to see if that demand's going to be there and leave us with more properties at the end of that time or less. And we'll keep an eye on if the market does break through this trend to start tightening up even more. But for that to happen, we're going to need to see more demand, and that's what I'll be touching on soon. Compared to the same time last year, we've had 3.5% increase in the number of properties for sale. So pretty much on par with where we were last year, only a marginal increase. And I probably put the supply down to the fact that a lot of people would come on the market and sell if they could, but they can't get the prices that they wish yet, so they're hanging off, and only those that are coming on have to sell are selling. So I suspect there's a lot of pent-up supply here still waiting to come through as well. When we actually look at the number sold, and this is the trend that has worried me the most, I guess, and when you can take it back all the way to 2013 even, when I started keeping these stats, and you can see that there's been a gradual trend downwards in the number being sold every month, not just for the last 2 years but the whole time, and that trend in decreasing demand is what has also seen prices decrease over that period. So we really need to see this change and break through this trend line before we're going to see us move around into recovery. So we're pretty much on par with where we were for demand at the same time last year. Marginal difference, not really noticeable, but the overall trend has certainly been downwards since then. Now, when we look at our average selling days, you can see that things have been, we started to actually take a bit of a dip towards the end of last year in December, but then with the election and the Royal Commission changes washing through, really put the brakes on the overall market. We jumped up and we're still sitting at this just below 80 days. We're at 75 odd days, 78 odd days on market. That's a long time to take to sell the average property. Now, what a lot of people don't understand about the average selling time is that properties that are priced well actually will sell in 2 to 3 weeks. And it's not that it's taking 75, 78 days to sell a property. It takes 2 to 3 weeks to sell a property once it's at the right price. It's taking that long to find the right price. So once we get there and we find the market with the property that we're selling, it'll sell very quickly. And a property will still actually go stale around the 30 to 45 days mark when everyone in the market has seen it. So you've really got to be trying to position the property to be attractive from the beginning, get multiple buyers interested, which still is happening in this market when you find it, and then looking to accept the best out of the market in that moment. But yes, this trend is still upwards for average selling days as well. Until we see that reverse, we're not going to see the prices start to increase either, across the median anyway. You can see that our median house price, which is the final factor that reflects both the supply, the demand, and the average time to sell, the price will always kind of respond last in those stats. And you can see that we've had a continual decrease, and we're now around the 490, 495 mark. And similar time last year, we were up just over 500. I think it was 505 from memory. So we had a bit of a dip down, but our overall trend is still down. You might be able to hear my baby's just woken up in the background, and I'm going to persist. Otherwise, we'll never get this to you. Units median price has also continued to slide just as much over the period, if not more. You can see that we started at over 450 odd thousand. We're now at just under 380. Then when we go into the Perth rental market, you can see the number for rent, thankfully, had started to decrease since about September 2 years ago. We've had a continual decrease over that time, trending downwards, and we're down 2.4% on January this year, and we're down 13% roughly on a year ago. So there's 13% less properties for rent. So as the number for rent decreases, the vacancy rate and time that a property is vacant decreases too. And as that happens, our market starts to tighten up. And when we generally get below 3%, we see a pressure starting to build on rental prices, which is happening now in many suburbs. Early days for pressure too. So we're running at 2.5% for the last few months. And we've just had the June stats come out, which I have not put on here. And the vacancy rate has jumped back up slightly to 2.9%. So we need to see if this overall trend is going to continue. And at 2.9%, the average suburb and median rental price property will, at $350 per week approximately, will be just holding its rent. And so we haven't really seen that the median property, the average property, start to come back yet. But many suburbs are having increases. Many properties, as we renew them, are having increases in their rents. So there's still some suburbs dropping and some suburbs we're increasing, but the average overall's about the same still. So you can see that vacancy rate tightened up significantly since the same time last year. 51% decrease, massive. Median rent, you can see, has been unchanged over the last 6 months and the last 12 months. We're at $350 per week, basically flatlined and stabilised there. And we were up as high as $480 per week, which was the average rent of our overall portfolio that we managed back in October 13, and it's been a long, very difficult slide. That's 32% decrease over that time. I know, because I felt the pain myself. I thought I'd pop this slide in, which is some data I just came across. It's not really easy to find all the time. This is the 10 highest rental yields in the metro area. Thought I'd bring it to you for those investors that do like to chase rental yield while I was touching on the rental market. You can see that they're the lower price median price dens, and most of them are around Kwinana. And we've got the Rockingham area in Warnbro, Coolunga. Then we've got the Armidale, Brookdale area and Coongamaya. So very distinct areas of Perth, and you can see that we're readily now getting rental yields above 5% the highest being around 5.8%. So if you are more of a rental yield investor, check out those areas. Just be careful because they do have a bit further to fall for selling prices, so make sure you buy well in there. You can see out of them all, the demand to supply ratio is highest in these top two, so if you're going to focus anywhere, those would be the ones I would suggest. The others are over half, and that's going to show that they've still got much further to fall than the top two. So, property clock, and where is Perth? Well, we're still in this bottom of the market phase, and I would argue that how can we know we've bottomed? We can't truly know until we start increasing. So I would suggest that we're actually more around here still, approaching the bottom, because month on month we are in fact still decreasing in most of the stats. The Herentov White property clocks seem to turn us around into the bottom of the market phase once our rental market started to bounce back, but I think it's been a bit premature, and we've had some other factors that have really hurt us hard over the last 6 months, being the election and the Royal Commission wash through. So it's just going to take a bit longer to get us back on our feet, and we've got a further slide to go, I believe. I'll touch on that a bit more in a minute, but where do we stand for unit market? We're still very much in a declining market for units across Perth, back around here at 3 o'clock. So, key focus for today is chatting about the factors affecting our market. I'm going to go into finance, because if people can't get finance, they can't buy houses, simple as that. So what is happening in that space is very important for us. And then the other major things that lead to demand is employment. So if employment rates are going up in WA, that's a very positive sign. And what drives employment is projects, because we're so mining focused, and infrastructure projects make a massive difference to this employment factor. And both of these things lead to population increase, and population increase leads to demand in housing and upward pressure on prices. And all of this can be reflected in confidence and measuring that as well. So consumer confidence is a big factor that leads to demand. So let's go through the first, and then finance. And the RBA cash rate has dropped, not this month in August, but it dropped in June and July by 0.25 basis points, and we're now at 1% cash rate. I just heard on the radio today that they're saying they'll go as low as they need to, and it could end up as low as 0% if it's required, and that kind of has to worry a lot of us as to what is the overall state of the economy. And clearly these drops are very much needed to try to cushion the eastern states markets, and we certainly haven't bounced back yet either. So it's a blunt tool, and we need to probably, as governments, look at what are some of the other ways that we can help get more buyers into the market and increase demand, not just be looking at this. I mean, at the same time, the WA government has gone and increased transfer duty for foreigners, which was a bad move in my opinion. I'd love to collect more taxes from foreigners, but we need to make it as easy as possible for them to be getting into our market. So we need to be looking at the taxes and the duties and the other things and make it easier from that viewpoint, as far as I'm concerned. And more importantly than probably what interest rate we're paying, because if you can't afford in the bank size to get a loan, it's very difficult. You don't even need to worry about what interest rate. But APRA has made their changes to the banking criteria and how it's assessed, and the banks are slowly starting to relax their lending criteria and no longer assessing it at such high interest rates. They're now assessing it at a margin on whatever the current rate is, not at, I believe they were assessing it at 7% before. So that will enable more buyers to be able to get into the market over the next 6 to 12 months, and well, more buyers equals more demand. much needed, which is a very positive thing for us on the finance side. With employment, you can see, and I'm going to start tracking and reporting to you the changes in annual employment in WA and also how that compares to overall Australia. And this is the seasonally adjusted stats, so at different points in the year there's higher population than others, depending on the seasons and what that does. But you can see that we were, up around our peak at June 2011 in Australia and June 2018 in Australia. WA's kind of peak was in that 2012, 2013, which is when we hit our peak of the market, funnily enough, when employment was growing by its fastest per year. We actually had negative growth in employment, you can see, in June 2017, and over 2018 we moved back into the positive, having growth in employment per year, and we're now sitting at around 1%, and we've been trending downwards for about the last year. So we need to see this pick back up again. We need to see the trend get back up above 1%. We need to see it in the 3s and 4%, more in line with the average in Australia, to be seeing that demand side turn around and seeing prices turn around. So what is actually going to drive the employment is projects. And there was a really great article in the West on 28th of July going through the top 50 projects and their start dates and the statuses of them, and I found this to be incredibly useful because just at a glance you can see when projects are coming on, when we're likely to have an influence on our employment stats that I just covered. And you can see a lot of these major ones, the biggest projects, are all 2024, 2026 out of those top 4 projects. And then we move down, we're seeing 2022s, 2024s, and there's not too many in the 2019, 2020. So taking a look at that, I would argue that we're more likely to be hitting our straps of our recovery in that 2022, 24, 26 period, and things are looking more rosier for demand in those years, and we've got further to go before we actually start to get around into that recovery, and it's likely to be a 4 to 5 year period from 2022 to 26 when we actually we'll have some good uplift over that 4-year period. It's going to take a while to get there, I believe. Now, when we look at population growth, so if we get the job growth, if we get projects, then the population follows, then we get demand on our housing. So looking at the change in population, we've had approximately a 1% change increase over the last to December 2018. So this is the most recent stats that I can get. Population reporting is delayed and won't be coming out probably again until December this year. But you can see that the interstate migration has still been negative, so we've still had people that we're losing to other states. We've had a bit of an uptick towards the end of last year in the overseas migration, but we really need to be getting this interstate migration coming back. It has been decreasing in the number of people that have been leaving, but we need this back in the positive. And you can see again, when we were last finishing our growth period in December 2012, we were up at almost double the net population increasing per year. So we've got a long way to go to be getting back to that level of demand. So how do we compare to the other states? You can see WA, that's 1%. Here in the middle, you can see that Victoria is still tracking to December last year at above 2%. I think it's 2.25 roughly. New South Wales 1.6 odd, and ACT, that's high, 1.8 odd. So all those others are still growing at faster rates than WA, and that's why they're going to spend much less time in their downward markets, and they're going to be recovering a lot quicker too. And we've really got a long way to go to be getting back on par with the demand that they've got in those states. They can't keep growing forever, and that's why they've come off the boil. Prices just got way too high. The APRA and Royal Commission changes happen, and the election happens, so they've got to cool off for a while. But you can see that we're still ranking very low. The only states that are lower than us is Northern Territory. Heaven forbid for them, they've had negative growth over the last year, and South Australia is slightly less than us. So finally, consumer confidence, and how is that looking for us here in WA? And I was pretty excited when I saw this graph, because you can see that we've been building in confidence, and this is a measure by the Chamber of Commerce, CCI WA, and you can see that we're at one of our highest levels in short-term confidence that we've almost ever had since back in 2013. So that's a very good measure that we're starting to get back on track for confidence. We're starting to feel more confident in the stability that we have and the point of market that we have, and in our jobs and just in our overall economy. So that will start to flow through to the housing market in due course too, if it can stay up there. So my crystal ball to round things out, I think we've really got another 6 to 12 months to be before we really can declare that we've bottomed, and I don't think we can call that we've bottomed until we head around into recovery, because you don't know where the bottom is until you start coming up. So I think it's going to be 6 to 12 months before we start seeing the average median prices come up and slowly recover from there. I think we're then going to be going until 2024, 26 with those projects that we've seen, and it's going to be a 5 to 6 year kind of upward period at least, but it's going to take us some time to start getting into that. You can see from I've looked very closely at the demand levels, the average time for properties to be selling in suburbs, and even though I'm saying there's a bit further to fall for the majority average median in Perth, there's many suburbs that are also doing very well. So north coastal areas like the Heathridge, Padbury, Hammersley and Craigies, I think they're going to do very well over the next year. This bracket between 5 to 700, where it's most affordable, is where the majority of the action is going to be. And even though the median will be still dropping a bit further, this end of the market will be going upwards. It'll be starting to increase. And then we'll also see, and we are seeing at the moment, demand in the western suburbs at the $1 million plus price points that I expect to continue to do well. And that's areas like Claremont, Swanbourne, Cottesloe and Dalkeith. Thought I'd also make mention of a couple of suburbs on the south side that I liken to the northern suburbs. Willetton and Riverton doing very well because of the schools there, and all of the suburbs in the 500 to 700 price bracket are good for schools, good established areas for families. So that's what's kind of common to all of them. Now I think the bottom end, in general speaking, has some further to fall, and that's the sub 450 price bracket. So if that's where your budget lies, you need to be very selective on what you're buying when you're getting in, making sure you're purchasing well and protecting yourself if there is a bit further to fall. Rental market, I think that's going to continue to recover before the sale market does, improving rental yields and also encouraging tenants to become homeowners and get out of renting. And why? Because as new entrants come into the state, they often rent before they buy, and as there's also still very few investors adding stock to the rental market. So tight supply, increasing demand with renters, and I expect rental prices to continue to recover before the housing market goes around into its full recovery. So I hope that's been useful. I'm actually going to now start reporting much more readily on the demand sides to our equations. I think that's the key to our recovery, and I hope this has all made sense. Drop us a line if you want some input on your specific property. We do manage in over 200 Perth suburbs, and I've sold in 160 odd, so I know what's going on and I've got my ear to the ground. I can help you with your specific situation. Cheers.